The global economy is like a game of Jenga. Each country, each policy, each trade deal is a block in a towering structure of commerce and cooperation. One wrong move and everything could collapse, sending shockwaves through markets and livelihoods around the world. Recently, the US has been pulling out blocks by slapping huge tariffs on Chinese goods, hoping to boost American manufacturing and protect local jobs from overseas competition. The unintended result? A flood of Chinese products once bound for America is now landing in the UK, filling British ports with goods that were never meant for their shelves. America's trade war has rerouted global trade, making Britain China's new favorite customer almost overnight and shifting the balance of imports across the Atlantic. Ports like Felixstowe and Southampton are busier than ever, handling everything from electronics to cheap garden gnomes, toys, and even kitchen appliances. This surge is reshaping the British market, bringing both bargains and big risks, as shelves fill with new brands and unfamiliar products. The upside? Cheaper gadgets and clothes for British shoppers with discounts and deals that are hard to resist. The downside? British manufacturers are struggling to compete, facing a wave of low-cost imports that threaten their survival. As of mid-2025, we're watching a real-time economic experiment. Chinese companies blocked from the US are thriving in the UK, forging new partnerships and expanding their reach. The UK, with its post-Brexit trade policies, is both a beneficiary and a potential victim, caught between opportunity and risk as it navigates this new reality. This isn't just about economics, it's about jobs, politics, and the future of British industry. Every decision ripples through communities and families. Decisions made in Washington are now deciding the fate of factories in Manchester, Birmingham, and beyond, changing lives far from Capitol Hill. We'll unpack why the US shut out China, how Chinese companies adapted, and why the UK became their new target in this global chess match. We'll see the upside for shoppers, and the looming threat for local businesses as the high street faces unprecedented competition. So, grab a cup of tea. Things are about to get interesting, and maybe a bit worrying as Britain's shopping spree unfolds before our eyes. Welcome to Britain's unexpected shopping spree. Let's dive in and see what's really at stake. It all began with a trade war. America accused China of unfair practices, claiming that Chinese companies were benefiting from government subsidies and intellectual property theft. In response, the US slapped tariffs of 25% or more on hundreds of billions in Chinese goods, making it much more expensive to import everything from electronics to furniture. Suddenly, everything from electronics to clothing became pricier for US importers, and those higher costs were quickly passed on to American consumers at the checkout. The goal? Make American-made goods more attractive, hoping shoppers would choose local products over imports. For Chinese manufacturers, it was a shock. Their main market dried up almost overnight, leaving factories scrambling to adjust. Factories went quiet, contracts were canceled, and companies like Shein and Temu faced major headwinds as their US sales plummeted. Their low-price model couldn't survive the new tariffs. American consumers started to look elsewhere, searching for affordable alternatives from other countries or local brands. Chinese exporters had to pivot fast. They needed new markets with big consumer bases and fewer trade barriers, so they began to rethink their entire global strategy. Enter the UK, a country with open trade policies, a hunger for affordable goods, and a market eager for new suppliers after Brexit. The US slammed the door, so China looked for another way in, redirecting its shipping routes and business focus. The UK, fresh from Brexit and eager to prove itself on the world stage, became the next big target for Chinese exports. Chinese companies redirected their focus, seeking out British consumers and forging new partnerships with UK retailers. The result? A massive shift in global trade flows, with shipping routes and supply chains rapidly adapting to the new reality. The UK became the new landing spot for Chinese exports, filling warehouses and store shelves with products once destined for America. This wasn't just a few companies, it was a systemic shift, involving major brands and countless smaller businesses alike. The US-China trade war had redrawn the map, and Britain was now at the center of this new global trade network. The stage was set for a retail revolution, as British consumers were introduced to a wave of new products and brands. And the UK was about to feel the full impact, with Chinese goods arriving at their doorsteps like never before. With the US market closed, Chinese exporters quickly rerouted their goods to UK ports like Felixstowe and Liverpool. Trade data shows Chinese exports to the UK jumped nearly 40% year-on-year, a massive shift. The UK became the new frontier for Chinese exports, especially in electronics and high-tech goods. Chinese laptops and smartphones, now uncompetitive in the US, found eager buyers in Britain. Imports of Chinese telecom equipment soared over 60%. E-commerce giants like Temu and Shein targeted British consumers, sending millions of small parcels daily. This de minimis trade, small, low-value packages, often bypasses customs, making goods even cheaper. The Royal Mail is overwhelmed, and British shoppers are loving the bargains. This wasn't accidental, it was a calculated pivot by Chinese firms, leveraging the UK's open market and efficient logistics. China had found its new gateway to the West. Why did China pick the UK as its gateway to Europe and beyond? The answer is surprisingly simple. Politics, economics, and perfect timing all played a role. After Brexit, the UK was eager to show the world that global Britain could thrive. To attract international business, it slashed tariffs and kept trade channels wide open, making it easier for foreign companies to do business. For Chinese exporters, shipping to the UK meant sidestepping America's steep 25% tariffs, saving millions, and keeping their products competitive. Compared to the EU, the UK is much simpler to navigate. There's just one set of rules, less red tape, and fewer bureaucratic hurdles, which speeds up the entire process. British consumers are not only digitally savvy, but also highly price-sensitive, making them the perfect audience for fast fashion giants like Shein and Temu, who thrive on quick trends and low prices. The UK's advanced ports and world-class logistics infrastructure make it an ideal entry point, not just for local sales but as a strategic staging ground for reaching the rest of Europe efficiently. Some Chinese firms even use the UK as a hub to re-export goods into the EU, breaking shipments down for easier customs clearance and smoother distribution across the continent. The result? The UK has become a frictionless, tariff-free paradise for Chinese goods, with goods flowing in and out with remarkable ease. In the midst of the US-China trade storm, the UK stands out as a calm, reliable port, a rare, safe haven for global trade. For now, Britain is reaping the rewards of this open-door policy, enjoying increased trade and economic activity, but the situation remains fragile and could change quickly. The UK's open stance has made it the perfect landing spot for Chinese goods, drawing in more business and investment than ever before. But with shifting global politics and economic pressures, the big question is, how long can this golden era really last? Shein and Temu have revolutionized retail by connecting Chinese factories directly to British consumers via apps. Their models spot trends fast, produce quickly, and sell at rock-bottom prices. When US tariffs hit, they shifted focus to the UK, launching massive marketing campaigns. The result? A flood of small parcels, each under the 135 pounds de minimis threshold. No import VAT, minimal paperwork. Instead of shipping in bulk, they send thousands of individual packages, overwhelming UK postal services. Traditional retailers like ASOS and Next can't keep up with this speed or pricing. Shein and Temu's real-time retail model is agile and low-risk, letting them test and scale new products instantly. British consumers get endless choice and unbeatable prices. The direct-to-consumer model is reshaping the UK high street. The US trade war created the opening, Chinese e-commerce giants seized it. For British shoppers, this feels like a golden age. Prices on everything from TVs to t-shirts have plummeted, thanks to the influx of Chinese goods. Families struggling with the cost of living can now afford more, new clothes, gadgets, and home goods. The variety and affordability are unprecedented. Even established retailers are forced to lower prices to compete. Innovation spreads faster, with budget Chinese brands offering features once reserved for high-end products. The result? More choice, lower prices, and faster access to trends. For now, it's a consumer paradise. But there's a catch. These bargains may come at a hidden cost. The short-term boost is real, but the long-term risks are looming. Is this too good to last? For British manufacturers, the flood of cheap imports is a nightmare. Local factories can't match China's low costs or scale. Sectors like electronics, textiles, and furniture are losing ground fast. Small and medium businesses are hit hardest. Rising costs at home, plummeting prices from abroad. The result: layoffs, closures, and a hollowing out of domestic industry. It's not just about lost jobs, it's about losing skills, innovation, and economic independence. If the UK becomes too reliant on China, it's exposed to global shocks and political risks. The short-term savings for shoppers could mean long-term pain for the nation. Is Britain trading its industrial future for a cheap t-shirt? Economists warn this is a sugar rush for the UK economy, great now but risky long-term. The trade deficit is ballooning as billions flow overseas for cheap goods. A weaker pound could make imports, including essentials, more expensive in the future. The UK risks becoming dependent on imports, losing jobs, skills, and innovation. Once the industrial base is gone, it's hard to rebuild. Experts say the government is too passive. Doing nothing isn't a strategy. They urge stricter rules on low-value imports and more support for domestic industries. Without action, the UK could end up less resilient and dangerously dependent on a single foreign power. The time bomb is ticking. The UK is at a crossroads, caught between cheap imports and the decline of its own industries. Shoppers are happy, but factories are closing, and the trade deficit is soaring. The country faces a choice: embrace the bargain hunter role and let manufacturing fade, or intervene to protect local jobs and industries. Doing nothing means lower prices now, but risks becoming just a distribution hub for China. Intervening means higher prices and tough political choices, but could preserve jobs and economic sovereignty. It's not just about trade, it's about what kind of country the UK wants to be. Should Britain make things, or just buy them? The current path, trying to have it both ways, is starting to crack. The tide of cheap goods keeps rising, but ignoring the risks isn't sustainable. A decision is needed, and soon. The ships from China aren't stopping. The future of British industry and identity is on the line.